Welcome to the Capital News. I'm your host, Alex Karitis. Today is Saturday, September 18th, 2021. Thank you so much for joining me. Hope you're all doing well out there. It is my intention to post a couple or a few podcasts this weekend since I did not post one during the week. It was my intent, but I just did not do it. So today's podcast, or at least this first one, episode 614, is titled Initial Claims and Money Printing. Typically on a Thursday, I like to read the report, the initial jobless claims report, and provide some updates to the Federal Reserve's balance sheet because we get those data prints. So that's what we're going to do with this first episode of the weekend here, sort of get back into the groove, if you will. But I'm going to kickstart this off with just some market performance to talk about how the market's wrapped up on Friday. Starting here with Bitcoin, we currently have Bitcoin trading at $48,300 a coin. That is up about 2% for the day. Back and forth week in the Forex or the currency exchange markets because there was a lot of data that came out this week. A lot of it was conflicting to some of the market analysts and pundits out there because you had a stronger than expected retail sales number come out for the month of August. And I'm going to talk about that maybe separately in another podcast in conjunction with some other topics. But a lot of that surprise was most likely due to a seasonal adjustment. Okay, so it wasn't that Americans have all of a sudden bounced back and they have more money in their checking accounts. There aren't any more stimulus checks coming out. Of course, we do now have that child tax credit that is being sent out there, and I'm sure that a lot of that money is being spent as opposed to saved for the children, but that's how it goes. But when you're in a stagflationary environment, which we are, and it's only going to get worse, hey, cost of living's going up. Food prices are going up. Now, this is all self-feeding, by the way. The more money we want to print, the more quote-unquote fiscal stimulus we want to throw out into the system, well, all that's doing is feeding this inflationary and stagflationary environment. Period. End of story. But, again, going back to retail sales, that surprise to the upside is mainly due to seasonal adjustment factors. Not because of a miraculous recovery, because we're not in the midst of a miraculous recovery. We are in the midst of the greatest depression. Now, you want to throw several $1 trillion into the system out of nowhere, I'll show you a good time too, for a little bit. But then we're going to have to pay the bill. And that's what we're all going to have to deal with. And a lot of us are already dealing with that now. I told you this a year and a half ago, before they even passed Nobody Cares Act 1.0, that free was never going to be so expensive. But that's all this was. This was a pass-through bailout. That's what the stimulus checks were for. 1, 2, 3, 4, however many they sent. It's sit down and shut up money. That's all it is. Because during the Great Financial Crisis, they just directly bailed out the banks, some insurance companies, the auto sector, bing, bang, boom. And because most of us who were alive during that time, we've never seen such an economic and financial implosion or explosion before. So he said, oh, okay. People said, well, all right, let's do what we got to do then. Not me, of course. I was against all that crap back then too. But nonetheless, people said, well, we got to do something. So they threw all of that money at those industries. They made them whole. They said they were too big to fail, so they must be saved. And that's what they did. And of course, a lot of the country wasn't pleased with this. And rightly so, because that's just anti-American, it's anti-capitalistic. But that's what we did, and that's what we continue to do here. But this time, since we have another financial crisis, another economic crisis, so soon to the Great Financial Crisis, just a little over a decade ago, oh no. Giving direct bailouts to industry is just going to look too bad, isn't it? It's not going to look too good. So this time, yes, we're going to continue to do that. We're going to give these industries, a lot of them didn't even need the cash, but we're going to give them the money. And not only are we going to do that, we're going to buy their bonds too. Remember the Federal Reserve buying corporate debt, which they're not allowed to do, but they did it. But they said, well, we can't just do that. We have to give some money to the little people because otherwise there's going to be pitchforks and marches in the street. And so we got to do something. Well, let's just give them $1,000 here, $1,400 there. I mean, most people can't come up with $400 cash in the event of an emergency. This was prior to the pandemic when we were supposedly in the midst of the greatest economy ever, which of course was not true, but that's what we were told. But most people couldn't come up with $400 cash in the event of an emergency. So let's give them $1,400 a stimulus check, and oh my goodness, take your sit down and shut up money. And most of that, of course, was just passed through because a lot of that money was going to be owed to somebody else. That's how this system works. You got credit card, you got rent to pay, you have a mortgage bill, utilities, blah, 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 student loans, whatever the case is. Most of that money was owed to somebody else. So it was just a pass-through bailout. You were the conduit. You were the middleman this time. But it worked because you thought you were getting something. And for a lot of people out there, they didn't need the money, so they were able to save it. Or they spent it on something that they otherwise wouldn't have maybe spent the money on. Of course, again, feeding this inflationary and stagflationary environment. And all of this is going to come to an end. And they thought, well, if we just keep doing this, maybe, just maybe it'll work. Maybe this will allow us to dig ourselves out of the hole that we've dug. No, we've just dug even deeper and deeper and deeper. And there's no accountability to any of this. And it's going to get very interesting next week because the Federal Reserve meets for their FOMC meeting. And then, of course, there will be the press conference with Jay Powell, the chair of the Federal Reserve. But another topic that I want to cover today is quote-unquote ethics. There's ethics discussions and reviews taking place at the Federal Reserve. Because it's come out in the news that at least a couple of the Federal Reserve presidents, because there's 12 district banks in the Federal Reserve, and then the board is at Washington, D.C. So one of the presidents up in Boston and one of the presidents down in Dallas, they have some individual stock holdings, and they made a lot of money. And the Federal Reserve was buying the things that they owned. Wow, what a surprise. I mean, is anybody really shocked by this? Are you really surprised by these ethics violations? I mean, I discussed this last week too. But it's just preposterous. This is par for the course. This is what these people do. And now they want to sell? And now they want to get out of their positions that when we're at market all-time highs? How convenient. Oh yeah, we want to sell at all-time highs. And we're just going to say, well, it's because of ethics. All of a sudden, we're concerned about ethics. They weren't concerned about ethics when they were making tens of millions of dollars on their trades. And of course, President Kaplan down in the Dallas branch, he's a multimillionaire to begin with. He was a former vice chair, I believe, of Goldman Sachs. Again, it's a revolving door, folks. How much more do you need to see? How many more connections do you need to see before you understand this is just one big game, and we are not invited to play it? It's one big club. We are not in it, as George Carlin used to say, and rightly so. All right, so they're talking about ethics, and I just hope, that on next Wednesday, when Jay Powell is giving his press conference, that the media beat the hell out of him. I mean, obviously not in person, because they're not there in person, I still don't believe, but, rhetorically, they should slam this man down. I mean, this is the job of the fourth estate, the media, to hold these people to account, especially people at the Federal Reserve, because they're not elected. We can't vote them out. Nobody overrules them. Nobody says, no, you can't raise interest rates, or no, you can't lower them, or you have to stop quantitative easing. You have to stop doing it. Nobody tells them to stop, and even if they did, they're not going to listen. So the media has an even more important role when it comes to holding the people at the Federal Reserve to account. Furthermore, this is our money. This is people's livelihoods. And of course, the Fed wants to continue to come out and say, well, we have to solve wealth and income inequality because that's a big problem. Well, you guys are the biggest driver of said wealth and income inequality, and it's even taking place within your ranks. You guys print money to go buy assets that people in the Federal Reserve own. Oh, that's not a conflict of interest. That's not an ethics violation. No problem. Nothing to see here, folks. And of course, Jay Powell is part of this cabal too. He has holdings. He has stocks. He has ETFs. He has index funds, whatever, the whole thing. Nothing stops them. Nobody stops them. Nobody holds them to account. And it's a true shame. Because just yesterday, September 17th, was Constitution Day. Maybe people should take the time to read the Constitution and understand what it means. And nowhere in that document does it say we're supposed to have a Federal Reserve. Because let me tell you something. If the founders wanted one, they would have set one up. But if you read their writings, if you read the speeches, most of them were totally against any type of central bank. Of course, Hamilton was a little bit different. But when you go to the real thoroughbreds, when you go to Adams, when you go to Franklin, Washington, Jefferson, Madison, and Monroe, right down the list, they didn't trust these guys. And rightly so. Because they understood history. The Federal Reserve is not the first central bank to ever exist. The U.S. government is not the first government to ever exist. This is what happens. They end up debasing the currency. One country after the next, one empire after the next. And when they're in their last chapters, their final chapters, things start to speed up. Well, we are clearly in our final chapters if we continue on this path. And there is nothing that is sending any signal out there to me that we are going to deviate and get on the right path. So we remain in the final chapters and things are speeding up. When we get to the Fed's balance sheet update, you're going to see and understand why. Continuing with market performance, back-to-back sell-off weeks in the U.S. markets as well as some global exchanges. The Dow is trading at 34,000, about 400 points. Gave back 1% to close on Friday. Still within all-time highs, very close to all-time highs, as is the case for the S&P 500, closing at 4407, giving back 1.5%. And the NASDAQ 100 trading at 15,300 points, giving back 1.5% as well. But all trading very close to their all-time highs. On the commodity front, we have WTI trading at $71.94 a barrel. Brent is at $75.29. Natural gas has been on a tear to the upside, trading at $5.05, and I imagine natural gas will continue its climb higher over the winter months. And if you're looking globally at what is taking place politically, with all of these little dictators all over the place pushing one quote-unquote green agenda after the next, shutting down pipelines, restricting this, restricting that, plus all of the global supply chain restrictions to begin with due to the pandemic and the subsequent policies that have been enacted, I imagine natural gas prices are going to go much, much higher. And this in and of itself could cause many protests and riots the world over, because if you can't heat your home or it becomes extremely expensive to do so, look out. Look out. So that's something to be mindful of. Gold and silver got hammered this week, pretty much off of a stronger than expected retail sales report, which of course was bogus due to seasonal adjustment factors. But anything to pick on gold and silver, they're going to get away with it, and that's exactly what they did. Gold is at $1,754 an ounce. Silver gave back 2.4% yesterday and now trades at $22.38 an ounce. This is an opportunity as far as I'm concerned. Gold and silver have been around for thousands of years. They've been around for thousands of years for a reason. They have withstood the test of time. So any give back, any pullback like this, continue to accumulate. At least that's what I am doing. Same thing with commodities in general. We are in the midst of a multi-year bull market run in commodities. Okay, so pay attention to gold and silver, those mining stocks and other mining stocks and other commodity stocks, aluminum, oil and gas, propane, lumber, the whole thing. Iron ore, copper, the whole thing. There's pullbacks. Nothing goes straight up. Nothing goes straight down. But you have to be invested, I think, in real assets. Okay? In real assets. Because economic gravity is going to take hold, and you want to be on the right side of that trade. All right? And then to round it out, Uncle Sam's 10-year junk note is yielding 1.36%. And of course, there has been some back and forth movement here with Uncle Sam's debt because the markets are just confused. And of course, people would still like to look to the bond market and say, well, that's the market that's really going to be a little bit calmer, a little bit more rational when compared to the stock market. So that's the better barometer. Well, typically that's the case. But the bond market is so manipulated, it's not even funny. This is one of the biggest bubbles on the planet. So it's hard to get a real clear picture when just looking at the bond market. You have to look at a number of different factors and variables out there, which is, of course, is what I do here at the Kapital News. And yes, I still look to the bond market. That's why I still discuss it during market performance. I still look at these yields against other yields. I look at them against other assets to see how things are correlating, how things are trending. But we are in the midst of a stagflationary environment. A lot of people trading these markets have never experienced a stagflationary environment. We haven't had one, at least not a significant one in this country, since the 70s, early 80s. So there's not a lot of people around that are familiar with it, and most definitely a lot of young people who've never invested or traded through one before. And then, of course, there's still the argument out there as to whether or not this is an inflationary environment, a stagflationary environment, or a deflationary environment, which, of course, to me, the deflationary argument is completely ridiculous and preposterous and insulting to so many people out there who can't afford to buy a home, who can't afford to buy a car, new or used, whose bills are going through the roof. Utilities are going up. Gasoline prices are going up. I mean, yeah, but somehow they want to make the argument that it's deflationary. Somehow they completely ignored what was taking place prior to the pandemic, what was taking place globally with all of these protests, riots, and demands for people demanding from their governments to change, to resign, to leave. They weren't doing this because the cost of living was so affordable. They were doing it because they couldn't afford to live. In that final tax hike, that final increase on the price of diesel or natural or on gasoline or on a fare to get on the metro, that was the final straw that got people out into the streets demanding change. And again, I stress this was before the pandemic, because we were not in the midst of the greatest economy ever, not here in the United States, not globally. One economic variable after the next was rolling over. I covered them in length on this podcast because that's what I do. I don't listen to the nonsense BS on the media coming out of a politician's mouth, whether it's Nancy Pelosi or Donald Trump. I don't care. We know how to look at the data. We know how to interpret the data. And it's not just the numbers. You have to look at reality. You have to look at how people are responding and how people are behaving. And a lot of economists, I think, get lost in the weeds. They get lost in all of the numbers. And they say, well, if we look at this and we look at that correlation and blah, 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 and what's happened historically, well, then this is where we are. Then you have to open your eyes, idiots, and you got to look out the window and you got to say, how are people responding? Does that jive? Okay, then my thesis might be correct. I'm going to keep going that way. If it doesn't, you got to say, well, something's missing. And so a lot of people who are arguing on that deflation side got to open their eyes and ears, got to open the doors and the windows, and they got to pay attention to what's going on out there. Now, could there be lower prices in some goods and services that people don't need? Absolutely, because the demand's not going to be there. That makes sense. Because the prices of the goods and services that people do need are going through the roof. And so, I mean, just by the way it works, you now have fewer dollars to go out and buy those other things that you want as opposed to the things that you need. You get it? That's what I have been stating here for months, maybe even over a year now. It's been a long time. So I hope that makes sense to you. I hope you understand that. And of course, I'm going to continue to preach that. And all of the other data that keeps coming down the pike keeps reinforcing what I have been arguing. So let's go to the Department of Labor in the initial jobless claims report. So for the week ending September 11th, initial claims on a seasonally adjusted basis came in at 332,000. This was higher than expected and higher than the prior revised week, up by 20,000. Last week's revised level was up to 312,000. Week ending September 11th, on a non-seasonally adjusted basis, the number came in at 263,000. For the week ending September 4th, these are continuing claims. On a seasonally adjusted basis, the number comes in at 2.66 million. On a non-seasonally adjusted basis, continuing claims came in at 2.33 million. So trending lower, that's what we like to see. Of course, on the initial claims itself, we don't want to see that number going back up, and it's still about 100,000 higher than where we were prior to the pandemic. So we still have a long ways to go. For the week ending September 11th, for the PUA program, the Pandemic Unemployment Assistance Program, an additional 28,500 filed a claim. Of course, these programs are running out of runway, and the extra little bonus that the government was sending out there has expired. So it'll be interesting to see how these numbers start to move over the coming weeks and months ahead. In aggregate, for the week ending August 28th, recall that the aggregate figure in this report lags by a couple of weeks, taking into consideration regular state, federal employees, newly discharged veterans, the PUA and PEUC programs, extended benefits, state additional benefits, a work share gives us a grand total of 12.1 million Americans still claiming some form of unemployment insurance. 12.1 million Americans, week ending August 28th. This is a week-over-week increase, unfortunately, of 179,000. The biggest increases came in the PUA program at 397,000. The biggest decrease came in state extended benefits at a drop of 212,000. At 12.1 million Americans, this gives us a de facto unemployment rate of 8.8%. It's nice to finally see the quote-unquote de facto unemployment rate below double digits, but it is still stubbornly high. And when we went through the August jobs report, we noted how that number was not as strong as many were anticipating and hoping was going to be the case. But we are not in the midst of any great recovery. This is stagflation. This is the greatest depression. You got it? And in that report, we understand that a lot of people are leaving the workforce. Okay, so this is just not a pretty picture all around. It's not. That's why the government is trying to discuss passing that $3.5 trillion, of course, over the next 10 years, whatever excuse they want to use. That's what it's going to be. They want to push that. They want to discuss another stimulus check, something, because they know they are out of runway. They got to do something. Dingbat Janet Yellen, our Treasury Secretary, who was also a former chairman of the Federal Reserve, for those of you who are unaware of that fact. Again, folks, revolving door. It's all it is. One agency to the next, one big bank to the next. That's all they do down there. But it's ethics. They're concerned about the ethics, okay? Okay, you got to believe them. How much money does she have in the Treasury General account? Well, it's dwindling. It is dwindling, and it is dwindling quickly. And if we continue to dish out tens of billions a month, it might even be over $100 billion a month when it comes to this child tax credit rebate, whatever the hell we're doing now with this. I mean, we're broke. We're broke. Just like most individual households, unfortunately, in this country, which, of course, wasn't supposed to be the case several months ago, because of all of these stimulus checks and everything that was going through. A lot of people were out there, some economists, market analysts, pundits. Oh, this is going to be the best recovery ever. Because if you look at the savings of American households, I mean, it's never been this high. Clearly, that's just going to be an economic boon moving forward. No. They got it. They spent it. It's gone. We're back to a negative savings rate, which means we're broke. Okay? It didn't take long to get back to normal. It was just an aberration. It was just a joke. It was just your sit down and shut up money. That's all it was. I hope you understand this. So we're back to normal, unfortunately, there. And a lot of people are homeless. You got homeless encampment cities all over the place. You still have the pandemic. Of course, it gets very arbitrary, right? Science, the party of science, the Democratic Party, the party of science, somehow science stops with immigrants. If immigrants are coming in here, they don't need to be inspected or tested for COVID-19 or Delta or anything. Perfectly okay. Science stops there. If you're the United States Postal Service, you get an exemption. You're not going to be mandated to have a vaccine. Science stops at the post office. Did you know that? You do now, according to the party of science. Science also stops at Congress and congressional staff. Science stops there because they are not mandated. They are exempt. If they don't want the vaccine, they don't have to take the vaccine. Everybody else, though, you're supposed to take it. You understand this? The party of science miraculously stops for certain institutions and for certain groups of people. No, but keep listening to these people. Keep taking one shot after the next, unproven, untested. Okay, keep doing it. And now, of course, we have the FDA comes out with some booster information and say, we don't really, we're against the boosters for right now. We're not recommending it. Of course, Demented Joe, our fearless president, he's all for them. He wants to be the tough guy. He wants to tell all of these corporations and businesses, if you have over 100 employees, you got to mandate it. Now, he can't do that. He's trying to talk them up. He's trying to put pressure on these businesses to do so. Some businesses will do it. Others will get enough pushback where they're going to stop. And then we'll just see what happens. But I just want you to understand that the party of science gives exemptions, because science, there's obviously bubbles around the post office. There's bubbles around Congress and their staffs, and wherever else they want to put a bubble. But for you, small businesses, individuals, the non-essentials, too bad. You lose again. You don't want to do it? Too bad, you got to do it. You understand what's going on here? And then the party of science wants to tell us, well, it's no longer really a pandemic of the actual virus. It's a pandemic of the unvaccinated. Do you not understand? Do you not see what's going on here? Do you not understand divide and conquer? This is one of the oldest tricks in the book because it works. This is what they're doing. They're trying to get us to turn on each other, to fight each other off of these stupid, nonsensical topics. Whether it's race. They want white people fighting black people because they just want to say every white person's a racist, and it pisses people off. Well, now we're going to go at each other. No, don't do it. Don't fall for their trap. Now, okay, well, that didn't work, or at least we got to pause there on the race war. So now let's go to the science war. Let's go against those who are vaccinated, against those who are unvaccinated. Can you not see this? Can you not pick up on what they are trying to do? And all the while, we're not supposed to pay attention to the men and women behind the curtain because they want us fighting each other. They don't want us knowing that Congress can day trade and do insider trading and have no problem whatsoever. They don't want us knowing that members of the Federal Reserve are boosting their own portfolios and their own net worths at our expense with no oversight. Then say, oops, our bad, we're going to do an ethics review. Everything's okay now after they've walked away with millions and millions of dollars, the types of money that people will never make in their lifetime. These idiots pulled it off in a year because they're printing money. But nothing to see here, folks. Take your sit down and shut up money. Fight amongst yourselves because you're white, you're black. Fight amongst yourselves because you're vaccinated, you're not vaccinated. You pick up on what's going on here? And then, the complete fiasco that's taking place geopolitically. Because we have an idiot, incompetent, demented president who has been an idiot and incompetent his entire adult life. On record! But no, we got to put this guy in. We got to put him in. Now he just happens to be demented too, so now it's a triple whammy. And what's worse, unfortunately, is the woman that he has picked for his vice president in Kamala Harris. Yes. So it's like, well, do you want Joe to resign? Do you want something to happen? Because then what's going to happen? We're going to have to deal with Kamala. God help us all. You understand why we're in the final chapters? These are the types of lunatics that are at the helm, one after the next. Then you bring in the monetary system. And so we have the Federal Reserve's balance sheet, surprise, surprise, hitting a new record all-time high at $8.5 trillion, a week-over-week increase of some $90 billion. Remember, the Federal Reserve has committed to quantitative easing of at least $120 billion per month in purchases. That's supposed to be a breakdown of $80 billion in Uncle Sam's debt and $40 billion in mortgage-backed securities. Well, in 1 week alone, we did $90 billion. Not the month. 1 week. Because this is the only thing that is keeping equity markets afloat. And it's the only thing that is keeping the bond market afloat, meaning lower yields. You remove all of this purchasing by the Federal Reserve and other central banks globally, because they're all doing the same thing, you would have yields and interest rates 4, 5, 6%, maybe even higher depending on the country, which we cannot tolerate. We can't tolerate it. Europe can't tolerate that. Japan can't tolerate that. Have you been paying attention to what's going on in China right now with one of their major real estate developing firms, Evergrande or whatever it's called? It's an implosion. They're defaulting. All of those ghost cities that China was building just because, well, we're communists and as long as something's being built and GDP is going to look fantastic. That's not how it works. There has to be demand for the things that you are building. There wasn't. And there was basically a little city that was just demolished. 15 skyscrapers were just demolished. Housing that was just demolished. It was a ghost town. It was a ghost city in China. 15 high-rise buildings. That would be some of the biggest cities in this country. Gone. I mean, it was probably shoddy construction to begin with, but that is the joke. That is the global economy. And as much as I dig on our economy and our policies, and rightly so, what do I always say here? You want to see a smoke and mirror show? Look at China. Okay? They are imploding. The dominoes are set up. They go, everybody else goes. We go, everybody else goes. Europe goes, everybody else goes. That's how interconnected we still all are. And that's fine to be interconnected. I'm not knocking that. That's a good thing. It does provide some diversification. But the way that we're operating, the policies that we are implementing, fiscally and monetarily speaking, have been completely destructive and devastating. And that is perfectly evident, but people just want to think that they're smarter for some reason. They think that they're able to dictate, that they're able to pull the levers on this economy, on this part of the economy, on this one, move one this way, move one that way, and everything's going to balance out and work itself out. That's not how it works. Market forces would do that if we were allowed to have free market capitalism in this country again, but that doesn't seem to be an option. It's too fun doing insider trading. It's too fun bailing out one industry, one company after the next. It's too fun. So they're not going to stop it. Plus, nobody's stopping them. They're making so much money. Where's the incentive for them to stop? They have no incentive to stop because nobody stops them. They're getting theirs. They're making their millions. They don't care about you. Have you not woken up to this fact yet? Where everybody's supposed to be woke. This is supposed to be the woke society. Have you not awoken to the fact that these people do not care about you? Obviously not. Obviously not. It's more about the race wars, and it's more about the pandemic of the unvaccinated. That's what you're supposed to pay attention to. Don't connect the dots. Don't think logically. Why are all of these things going up? Why are my utility bills going up? Why is it so expensive at the grocery store? Oh, interest rates are so low and mortgage rates are so low, but I can't afford the house because the prices are so high. Well, gee, I wonder why. Could it be that the Federal Reserve purchasing $40 billion per month in mortgage-backed securities has anything to do with this? Yes. Even some members of the Fed are coming out and saying, yeah, this does impact it. But are they stopping? No, they're not. Now, next week, they're supposed to discuss whether or not they're going to start and when they're going to start tapering and what that even means, to what degree. It's going to be nonsense. It's going to be nonsense because the first sign of fear in the markets, they'll be right back to doing it. Now, the question is, will it work? So if they actually do decide to taper to any serious degree, and there is some sort of negative sell-off, of course, right? A sell-off, everything's negative. There can be no justifiable price discovery. So any type of sell-off could frighten the Federal Reserve, scare the markets. We can't stand on our own 2 feet. We need the drugs. We need the monetary methadone. You got to keep giving us bigger doses, man. That's the point I have been stressing for the past year and a half, 2 years. That's when we'll know this game is over. When they keep pumping that money, then they keep expanding their balance sheet, but the markets continue to sell off. Because what left are they going to have to find any type of footing? That's it. That's going to be game over. It doesn't mean it's going to be a massive sell-off. Doesn't mean it's going to be a market crash. It could take the form of a market crash, but I don't know. I just know that when this day comes, that is going to be the signal that says this is it to me. And it's not going to be a day. It's not going to be a week. This is a process. Unless, of course, we do see a market crash, then, all right, that's going to be a different story. But this is a complete joke and a farce of an economy right now. And unfortunately, the masses have to pay the price, where they cannot afford to live. Okay? So to provide some further context and perspective with the Fed's balance sheet, if you go back to July of last year, so the Fed was already massively expanding their balance sheet, which I'll again talk about here momentarily. But just going from July of 2020 to where we are today, they have added another $1.5 trillion to their balance sheet. That means they've purchased another $1.5 trillion of mortgage-backed securities and Uncle Sam's debt. Okay? Now, the reason I stress this is a big number, because $1.5 trillion is a big number, is because throughout the Fed's entire history, from 1913 up until the Great Financial Crisis, the Fed's balance sheet was at $900 billion. Okay, so it almost took 100 years just to get their balance sheet to almost $900 billion, almost $1 trillion. Okay? We've just done that in a little over a year. Now, during the depths of the Great Financial Crisis, they increased their balance sheet. That is when quantitative easing started. And they increased it a little over $1 trillion, taking us north of $2 trillion. And then, of course, that was only supposed to be temporary, according to Fed Chair Ben Bernanke at the time. That was just temporary. That was just an emergency measure to stave off the biggest crisis in our lifetime since the Great Depression. But then, of course, the markets got addicted to it. They couldn't tolerate any type of pullback. And so you had QE1. You had QE2. You had Operation Twist. You had QE3. And then things sort of had to stabilize. They sort of had to level off. And dingbat Janet Yellen just kind of kept it cool. Let's not rock the boat. We know the markets don't like any type of pullback. Higher interest rates. Don't like it, so we're just going to keep it cool, man. We're going to keep it cool. Jay Powell comes in and says, okay, you know what? If we can't start tapering now, if we can't start increasing interest rates now, when are we ever going to be able to do it? Well, he tried it. Oh, boy, they tried it. Markets threw a hissy fit in the fourth quarter of 2018. President Donald Trump threw a hissy fit in the fourth quarter of 2018 because the stock market didn't like it. And you pause. You say, okay, no more rate hikes. We're still going to sort of lessen our balance sheet a little bit here, but not too much. And that's when we get to that low point in September of 2019. You got to go back to September of 2019. We're about $3.8 trillion then. That's the quote-unquote low. That's as low as they could go with the tapering, getting us off of QE. Couldn't tolerate it. Then comes COVID-19, then comes the pandemic, then comes the shutdown, then comes Nobody Cares Act 1.0, 2.0, 3.0, and bing, bang, boom, the Fed shoots up $3.4 trillion to their balance sheet. Okay, just dwarfing what was done in the past during the Great Financial Crisis and up until the pandemic. I mean, just completely shot through it. Now, of course, $1.5 trillion a decade ago could buy you a lot more than it can today, but that's the argument that this is an inflationary policy, because that's exactly what it is. All you have to do is pay attention to reality. Not a bunch of data where you get in the weeds and you can't see through it. Pay attention to what's going on out there. Half the country, again, couldn't come up with $400 cash in the event of an emergency. That's not because prices are so low and affordability is fantastic. It's because they can't afford to live. Now, a lot of people, are bad with money, but not that many to that degree. Okay? It's because of the system. It's because of the policies that we enact. You got it? So over this course of time here, this pandemic, the Federal Reserve has increased their balance sheet by, well, over $4 trillion, almost $4.7 trillion. And if we continue at this pace, even if they should decide to taper, and it'll be very small, but even at this pace, I mean, we're on course to be at $9 trillion on their balance sheet by the end of the year. Now, I've argued it could be closer to 10. And if something happens, if something should break, we will get there. We will get there very quickly. If there is a liquidity problem, perhaps even a crisis in China or other parts of Asia, the Federal Reserve will respond, as will other central banks. If they do somehow decide to taper and the markets don't like it, the Fed will flinch because they always do, because they're a bunch of spineless weasels. Then they'll put the pedal to the metal once again, unless they are ready to have this system implode. That'll be the tell. If they don't do anything, then they want the system to implode, because it's in their hands. They want to keep juicing this thing in the hopes that it keeps working. Then that's exactly what they're going to do. They're going to keep juicing it in the hopes that it keeps working. But they know that if they stop, there is no support underneath these markets. This is the only thing that is keeping them up. And it's a real simple experiment. Stop doing it. Let's see what happens. So that's another thing that the markets are going to be paying very close attention to. That's another thing that the Fed's going to be monitoring very closely, because that's really their mandate. Hell with stable prices. Hell with full employment. They'll just use that as an argument to do what they're doing. They're all concerned about the stock market because that's where they have their personal investments too. But now they got caught, and now it's an ethics concern, and now they are investigating themselves. Nothing like the fox investigating the henhouse. But again, there's no accountability. Nobody holds them to account. Most people, unfortunately, in this country don't even know what the Federal Reserve is, what they do, anything like that, which is another problem in and of itself. And of course, that is by design. And then our ineffective, useless members of Congress, both sides of the aisle, they never press them. And in fact, most of the time, they kiss their butts. Oh, thank you, Janet Yellen. Oh, thank you, Ben Bernanke. Oh, thank you, Jay Powell. And they get on the cover of one magazine after the next as being the heroes and the saviors of the economy. And without them, I mean, it would just be the Great Depression all over again. We are in the midst of the greatest depression because of these people. A lot of the country knows it. The media wants to ignore it. The media wants us distracted and divided, fighting amongst ourselves. Pay attention to what's really going on out there, because unfortunately, it's only going to get worse from here. This is going to be a very volatile and destructive decade. On the other side of it, if we learn from it, our best days could be ahead of us. If we don't, and people want to adopt more socialistic, fascist, and communistic policies, which is the trend right now, then our darkest days are ahead of us. I don't know what's going to happen. I, of course, hope it's for the better days, and people will say, oh, we got to get back to our roots. We got to restore the Constitution. We got to restore the rule of law. We have to restore free market capitalism. If that happens, with the technologies that we have today, with the ability to travel and communicate, I mean, this is the best is yet to come. But we have to adopt the right policies. Otherwise, it's going to be very, very dark for most of the world, unfortunately. So there it is. That's the first podcast of the week in episode 614, Initial Claims in Money Printing. The game continues. The music continues to play. And we will find out when it stops and what that means for all of us. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Koritis. Godspeed.